So in exit theory number 1, we talked about what happened in the previous bull markets. And now in exit theory number 2, I want to talk about the window of opportunity to take profits so that you are aware how much time we have as a trader or an investor to take profits in a bull market when it's time to take profits. So it's important that before we exit and or take profits on a trade, it's important we understand what happened in the previous bull markets, which I covered in exit theory number 1. So now let's take a look at the window of opportunity to take profits in a previous bull market to give us an idea how much time we have to take profits during a future bull market. Again, I'm going to go into detail on the first bull market here on the window of opportunity to take profits, and then we will go over the other ones a little bit quicker. So in this first bull market, if you'll notice that when the market goes up, our goal is to take profits in the top 1/3 of the bull market. In other words, if we take the bottom of the bull market where the bull market began and we go all the way to the peak, from the low valley to the highest peak, our goal is to take profits in the top 1/3 region. Now, here's the problem. When we are here on this candle, we don't know if this is the top. When we are here at this candle, we don't know if that's the top. When we are here, we don't know if that's the top or if it's going to go higher and that's the top. And when we're at this candle, we still don't know if it's the top or not. So even though I say that our goal is to take profits in the top 1/3, the reality is we don't know where that top 1/3 is. So what we want to do is we want to be aware that our goal is here. And then once we know that our goal is to take profits in the top 1/3, to average, like we might take profits here, 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 and go up. But in the end, where the average price that we're going to get is somewhere in here. So somewhere in this area. It's not going to be up to here, but it's going to be somewhere in this area here in the red. All right. So if you notice, if we map out the top 1/3 from the low down here in the valleys to the peak, the mountain peaks up here, then we can say that this is the top 1/3, right? So we know that it's happened already because it's already done. So because of that, we can look at it and say, okay, each of these are 1 week candles. Each candle represents a week. So it poked into this top 1/3 area twice. So that means that we have a 2-week window of opportunity to take profits in the first bull market. So let's take a look at the next bull market. This is the first bull market. We have 2 weeks here to take profits in the top 1/3. And again, what we did here is took the low and we drew it to the top and then we divide it into threes, right? The rule of 3. And what happens is we see that in the top 1/3, right, we have 1, 2, 3, 4, 5, 6, 7, 8, and 9. So we have a 9 weeks to take profits. So we could have taken, we got to take profits from here all the way up to here, and we want to make sure that we average in this top 1/3 area right there. So there's plenty of time here. So in this, we only have 2 weeks, but here we have more time to take profits. So there's no reason why we would not be able to do it in this bull market here. Now in the third opportunity to take profits, in the third bull market, if you notice, we do the same thing again. We look at the low, and we look at the high, and we map it out, and then we divide it into 3 areas, and we notice that we have 2 weekly candles in the top 1/3 area. So that lets us know that in this particular bull market, we only have 2 weeks to take profits. In this fourth opportunity to take profits in the fourth bull market, again, we're going to take the low down here of the valley, and then we go to the peak, and that's the high, and then we divide that into 3 areas using the rule of 3. And then we only have 1 week to take profits. So what this means is that when this happened, the probability that we're going to sell Bitcoins for $200 or $225 or $250 is very, very slim. Okay. The reality is on this bull market, we probably would be able to take profits down here if we're lucky. We're not going to be able to sell up here. But that gives us an idea that the time to take profits is very, very small window of opportunity. In the fifth window of opportunity to take profits, we notice that, again, we draw from the low of the bear market to the high in the bull market, and then we divide it into 3 sections using the rule of 3. And then in the top 1/3 is where we want to average our selling price. Okay, so up here you will notice that these weekly candles, there's 11 of them. So we have 11 weeks to take profits in this bull market. So there's plenty of time here. That's over almost 3 months to take profits. So this would be much easier for us to average price up in this range versus the previous bull market. In a sixth opportunity to take profits, if we count it, there's 7 weeks here. Each of these candles are a weekly candle. And again, we got that by going from the low of the valley to the peak up here, and we divide into 3. And then our goal is to average the selling price to be in this top 1/3 area. So we have 7 weeks to do that. Here's some notes I want to share with you guys about the opportunity to take profits. We have a big window of opportunity or a long duration to buy during a bear market. However, we have a very short window of opportunity or a duration to sell and take profits during a bull market. So what this lets us know is that when it's time to take profits, we cannot goof off or play around. When it's time to take profits, we have to be able to take action very quickly. Most humans do not have experience buying or selling large dollar amounts, and that's the reason why we prefer to sell by dollar cost averaging. And that's the abbreviation for that is DCA, dollar cost average. So when we get in, we buy a little bit at a time, or we DCA a little bit in, or we dollar cost average a little bit in at a time. And when we sell, we also sell a little bit at a time, or we DCA a little bit at a time, or we dollar cost average a little bit at a time. On Wall Street, the dollar cost averaging is called scaling in and scaling out. On the streets, you and I would call it dollar cost average in or dollar cost average out. But on Wall Street, I want you guys to be aware that the technical term for it, or the trading term for it, is called scaling in and scaling out. The reason why I don't use those terms in our course is because that's very confusing. It doesn't really tell us what the action needs to be. That's why we say the words dollar cost average in or dollar cost average out, because at least you can look at it and have an idea what we're talking about. Whereas when we use the word scaling in and scaling out, nobody knows what the hell that means. That's why we avoid using it. We like to call it increasing buying and decreasing selling your bet size. We went from scaling in and scaling out to dollar cost averaging in, dollar cost averaging out, but then it was still confusing. So we're always looking for ways to make things a little bit more simple for our students to understand. So we started using the term increasing and decreasing your bet size. So increasing your bet size means you need to buy more, and decreasing your bet size means you need to sell and get rid of it. When we are in the bear market, we want to increase our bet size on the coin. If we increase the bet size, that means we got to buy more of it. And then in a bull market, when it's time to sell, we need to decrease our bet size for that coin. And I found that by saying that, by increasing and decreasing the bet size, it helps our students understand it easier so they know what actions to take. Remember, we want to teach trading in a way so that our students can be independent traders and don't need us to hold their hands for the rest of their life in order to trade. We want our students to be able to trade on their own, so we try to use terms that are easy for them to understand the action that they need to take. We don't try to use terms to prove that we're smart or intelligent or anything like that. You guys already know, I came to America as a Vietnamese refugee. I grew up very poor in America in a ghetto black neighborhood. I hung around the wrong people. I never finished high school, and I went to federal prison for nearly 14 years for drugs and guns that I did not have. Okay, so because of that, I'm very simple guy. I don't know complicated words to make things complicated for you guys, all right? The good news is that if a high school dropout like me who went to prison for 14 years can become wealthy in crypto, there's no reason why you cannot do it also.